Good morning, everyone. Good morning. It is 10 a.m., January 27th, Monday. It is so good to see you all this beautiful Monday morning here in Austin, Texas, January 27th, 2025. Thank you all so very much for joining. A lot to go over this morning. Lots going on in the market. We're going to do a complete market overview so you know exactly what's happening within Austin real estate. We're going to look at the bond market. We're going to look at interest rates to see what is happening this week and how can we position our clients in a way that they can take advantage to some really positive movement today within the bond market. We're going to go over that. And if you do have any questions, I also want to take the opportunity to answer any questions that you all may have. I want to remind you that tomorrow morning, we have our mentorship meeting live in person here at the office. We do have our Wednesday broker Q&A along with the contract proficiency challenge review. So be sure to join us for the contract proficiency challenge review that we have Wednesday morning. As a matter of fact, let me go ahead and just show you this really quick. The contract proficiency that was published last week, due here in the next 2 days, due Wednesday, January 29th at 9 a.m., is a beautiful, very nice looking home in Georgetown, $725,000 offer, 45% down, 7% rate, 1 point origination. And here's the big one. Let me go ahead and make this a little bit bigger for you. The buyer wants the additional right to terminate if the property does not appraise for the sales price. Everything else is negotiable. So please be sure to do the contract proficiency challenge. I will review this as if it's a real contract, and then we're going to discuss this on Wednesday. So be sure to join us for that Wednesday and be sure to do the contract proficiency. And I also want to remind you that when you go to the Share Team Price folder, you not only have the PDF of the previous contract proficiency showing you exactly how that perfect, clean, complete, legible, enforceable, acceptable, and neat contract looks like, but you also have the video discussing that specific contract. So be sure to take a look at that, and we're going to have this for the entire year. So contract proficiency due on Wednesday, no later than 9 a.m. And just FYI, I'm not going to review any contracts after 9 a.m. So if you submit your contract at 9:01, it just gets rejected and you get a link with the correct contract. So 9 a.m. is the cutoff, and then we move on to the next one. So that's a reminder. That's going to be Wednesday. Be sure to join us Wednesday for our team training, broker Q&A, contract proficiency, and also a training session. But we're going to go ahead and just start today with updating our famous and infamous new listing to pending ratio. This is going to be the single best leading market indicator available for the entire Austin area. We do have a lot of new people here in the call. We've got some guests and we've got a lot of new agents joining Team Price, which is absolutely amazing. Welcome to Team Price. Let me give you a really quick overview on what this new listing to pending ratio is and why it is so powerful. It is very simple. We simply take everything that is new on the market plus everything that is back on the market, and we simply divide it by everything that is active under contract plus everything that is pending. When a property goes under contract, the listing agent has the option to mark the property either active under contract or pending. Active under contract means that the seller is still willing to accept backup offers. You can still show the property, submit backup offers. When it's pending, you cannot even show the property, and the seller is indicating we're not going to accept any backup contracts. That's the difference between active under contract and pending. That's going to give you the total level of absorption, how many properties went under contract. When you divide the new plus back on the market to everything that goes under contract, you're going to get this ratio. That's going to be the new listing to pending ratio. Now, anything that is red equals hot, blue equals cold or cooler. That's what the conditional formatting indicates. Red equals hot, blue equals cold. A 1.0000 ratio gives you a perfect market equilibrium, meaning 1,000 listings came on the market, 1,000 listings were absorbed by the market. Inventory neither goes up nor goes down. When the ratio is over 1, that means that more properties were absorbed by the market in relation to properties that came on the market. So if you've got a ratio of 1.2, that means that 1,000 listings came on the market and 1,200 left the market, as an example. If you've got a ratio of 0.8, that means that 1,000 listings came on the market and 800 left the market, which means that inventory will go up over time because you have less listings being absorbed by the market in relation to listings coming on to the market. Now, 0.75 ratio is pretty much the cutoff line between a neutral market and a cooler market. So when we see a ratio of 0.75, it's an okay ratio. It's like, all right, it's going to give you roughly that 4 months of inventory. Listings are slightly going up by not much. Once you get to a 0.6 ratio, between 0.6 and 0.7, that means that we are now noticing a tangible increase in inventory. A 0.6 ratio is going to give you a cooler market. That's why it's in blue. And inventory is going to go up over time. Once that ratio, or if that ratio goes into like the 0.5 range, that's danger territory. I mean, even anything under 0.6 is going to put you in that danger territory. And what I mean by danger is simply indicates that it's a very soft, cold market, and inventory is going to go up at a substantial rate. We update this on a weekly basis. At 11:59 p.m. on Monday, the new price increase, price drop, back on the market, active under contract, it locks in. So when you get this PDF tomorrow morning, or when you access teamprice.com under Insight and Statistics, go to new listing to pending ratio, and you get this update tomorrow morning, all of these fields are going to be locked. The pending category, we'll update this for the next 6 weeks. 80% of the updates will happen today and tomorrow, but agents can change the status depending even a week from now, 2, 3, 4, 5 weeks from now, but 80% of the changes happen really within a week or so. So that's the update. I am a firm believer on this new list and pending ratio. We're going to update the weekly, we're going to update the monthly, and then I'm going to print it out as charts. We're going to look at the charts and move on. I have been updating this ratio for a very long time. It is a tried and true. It helps you when you're going to listing presentations know what the market is like. Is it a hot? Is it a cool market? It's a leading market indicator as opposed to a lagging market indicator, which will be the months of inventory, sold price. Those are lagging market indicators. It'll show you what the market was like 3 months ago, 2 months ago. This shows you what the market is like today, and it's going to give you a really good sense to price your listings in a competitive manner. And on the buying side, it's going to give your buyers a really good sense of how much leverage do you have with the market. So let's go ahead and start updating this information. We're going to start with seeing if we have to update any historical pending. Keep in mind, this is going to be for the 6-county area. That's going to be Travis, Williamson, Bastrop, Hayes, Caldwell, and Burnett counties. Those are going to be the counties that we're going to be focusing on. And when you look at pending, I went ahead and updated most of this information early today, but this is going to go from 308 to 309. Let's go ahead and update from the 6th to the 13th. That's going to be 338. So all the updates are done. Let's start updating from the 20th to the 27th. Number of new listings. We are at a lower amount. Now, why is that? We're at 797. Why do you think we dropped from 1,042 to 797? What do y'all think happened in the past week or so that caused the number of new listings to drop? What do you think? Do you think the snow day had anything to do with it? Yeah, absolutely. The weather, you all. 100% the weather. We had Tuesday off. Everything was shut down on Tuesday. We had landscaping that had to get redone. A lot of stuff contributes to this going down. 797 is the number. I expect the number today to go up. So we're going to settle somewhere around the 850-ish or so. And then next week, we can expect more listings that were supposed to come on the market this past week. They're going to come on the market this next week simply because the weather has improved. This weekend was dreadful when it comes to weather. Did anyone here host an open house this weekend? How was traffic? I guarantee you it wasn't that great. We had someone host an open house on the listing that I have in Morningstar, and no one showed up. Not one soul showed up. So traffic was absolutely terrible this weekend because the weather was so bad. That's why the number of new listings went down. Let's take a look at price increases. We're at 151. That is a significant drop from the previous week at 299. We've got almost half the number of price increases this past week. Let's go to price drops. What's going on here? We are at 983. That is going to give us an 87%. This 87%, we take the price increase, the price drop, and as a percentage of everything that had a price movement, what percentage actually had a movement on the downside? That's going to be 87%. Just to give you some perspective, the average going back 1 year, if I highlight everything except for this week, the average is 88. So we're only 1 point less than the average. Not a big deal. Let's take a look at back on the market. We are at 133 back on the market, 17%. Not bad. Now let's start updating the active under contract and pending. Active under contract, 385. Not a bad number, especially with the way that the weather was. Now, you know the drill, you all. This is where you get to guess. Write it down over chat. Let's go ahead and get 5 guesses on how many pendings over the past 7 days. Now, keep in mind, this tends to be a lower number because agents can update this over the next few weeks. And we're going to start off with Kevin Walker coming in at 217. Sonia Komisarenko coming in at 198. We've got Precious coming in at 250, 3 down, 2 to go. Harold coming in at 225. Let's go ahead and get one more guess going, and then I will reveal this number. Let's get one more person to type in a guess, and I shall reveal it. One more person. I need one more. Okay, we've got Seth coming in at 189. Let's go ahead and take a look at this number. Let me click here. We are at, oh, interesting, 214. Y'all, that's not bad. That's going to take the ratio from last week at 0.6 to this week at 0.64. Not bad. I mean, already better than the past 2 weeks. Now, the reason why this ratio is better is right here, number of new listings. A drop. Let's just say that the number of new listings were similar to the previous week at 1,000. The ratio would come down to 0.53. But it's not 1,000. It is 797. So the ratio is going to be 0.64. So that's not a bad ratio, especially starting out the week, because at 11:59, this number is going to get locked. And then the pending number is going to keep on going up for the next 2-3 weeks. I can expect this ratio to settle somewhere around the 0.8. Not bad. It's a good way. Now, the big, I wouldn't call it a concern, but I would say something to be aware of is that next week, we could very well see 1,200 new listings come on the market because of the listings that were going to go on the market anyway. And then the listings that were supposed to come on the market this past week over the past 7 days didn't come on the market because of the weather. We had the snow day. We had all that nonsense. And now they're going to come on the market this next week. So it is something that we need to be very cautious about as we are listing homes. Let's go ahead and start updating the entire monthly. First thing we're going to do is go back in December and see if we have to change anything in December related to pendings. Exactly 1,500. We don't have to update anything. All we have to do now is start updating the month of January. So we're going to go in and let's see January 1st, year to date and month to date. Number of new listings so far. Wow. 3,046. We've already had 3,046 new listings come on the market for the month of January. January 2024, we had 3,191, which means we are going to beat January of 2024. It's only January 27th. We have, what is it? When does the month roll over? The month rolls over on Saturday. So we've got 5 days. 5 days of new listings coming on the market. So let's just do, and we're averaging, let me do a little bit of math right here. We're going to do this divided by 27. So we're averaging about 113 listings per day. And I multiply this by 5 days. We're going to multiply this by 5. That's going to be 564. So that's going to put us right around the 3,600 listing mark. Ah, wow. 3,600. I would say, if we go with 3,500. Last January, we had 3,191. This January, we're expecting about 3,500 new listings come on the market. Very interesting. So we're going to exceed last month by at least 10%. That's what's going to happen on the number of new listings. Let's take a look at price increase. We, so far this month, have had 866 price increases. That's going to be the highest number going all the way back to January of last year. No, actually, even more. 866 is going to, all the way back to June of 2023. Now, we did notice a huge number of price increases happening when? Let's go back to the weekly. A lot of price increases happened first week of January. Builders. When we pull this data, we analyze this data out of the 372 price increases, and then we also had 299 2 weeks ago. These are all builders. 93% of these price increases are builders. And now what are they doing? They're now chasing the market back down. Let's go to price decreases so far this month. We are at 3,523 price decreases, 80%. The average going all the way back last year, 89%. That's not bad. And this number is an interesting number. This is as a percentage of all the active properties. What's the price drop divided by the number of active? When we go all the way back last year, the average is 46%. We're at 35% right now. So that number is going down. That's a good thing. Let's take a look at back on the market. We are at 582 back on the market, 19%. The average last year, 19%. We're right on average. Let's take a look at active under contract. So far this entire month, we've had 1,262. Not bad. Better than December. Little bit of an improvement on active under contract already compared to December. But January 2024, we had 1,680 active under contract. We're at 1,262. Well, let's do a little bit of math right here. We're going to do 1,262 divided by 27. That's going to give us about 47 per day. So when we multiply that 47 times 5, 234, and let's go ahead and add 234 to the 1,262, we can expect about 1,400 to 1,500 properties go active under contract. That means that we probably are not going to beat January 2024 on active under contract. Let's go to pending. We are at 935 pending. That's going to give us a ratio so far this month of 0.61. The ratio, January 2024, 0.89. We are experiencing a slower January this year compared to January of last year. As a matter of fact, when you look at the difference between active under contract, pending, and new, along with back on the market, January of last year, we had a plus 416 at a 0.89 ratio. That's that tangible increase in inventory. January of this year, 1,431 on the positive. You see how it now transitions to that borderline substantial increase in inventory? That's what happens. So we're at 1,431 That's the difference between active or new and back on the market minus the active under contract and pending. So start adding 1,000, 1,000, 1,000, 1,500, and take a look at May of 2024. That was a positive 2,100 listings. The difference between new listings plus back on the market minus active under contract and pending, inventory goes up big time. That's why we had a record high inventory number of active listings. That was July of last year. It hit a record high, and then we started going down. I would say that just based on how January is starting, we are going to beat that July number here in the next, I'd say 3 months or so. It's January, February, March. Going into April, we're going to beat that July number of last year simply based on this ratio. Let's take a look at closed. So far this month, we've closed 1,598. This is for the 6-county area. Let's take a look at withdrawn. 496 properties have been withdrawn so far this month, and then expired 334. So there you have it. There's the update for the month. Let me do this. Let me move this screen off to the side. I'm going to print this as a PDF so that we can review some charts and some graphs, and then we will move on to the other part of our session here, talk about rates, talk about the bond market. It's just going to take me just a few seconds right here just to go ahead and get this converted to PDF, and then I can go ahead and open this up for you. So just hold off. Let's go ahead and get this going for you. So we're going to go here. I'm going to publish this as a PDF and then go ahead and open it up for you so that you can see the entire PDF. By the way, y'all, hope you had a great weekend. Then you do a weekly stats. Do they include new construction? Yes, the weekly stats do include new construction. Yeah, absolutely. And we also separate new construction. I want to see both resale and new construction. But when you look at everything, it does include new construction. Very good question. Let's take a look at some of the comparisons right here. This is going to be the monthly. And we can see this, you all, that on active. Let's take a look at month over month. Month over month on the number of active listings, we are down 0.2%, but we've made up some really good ground. We are up 41% already on the number of new properties. Let's focus on the year-over-year comparison. Year over year, number of active listings within the 6-county area, we're up 2.5%. New, we are down 4.5%, but we do have 5 days left in the month, so that's going to be positive. Price increases, we are up 78 year over year, January 2025 versus January 2024. We are up on price drops by 14. And when you look at back on the market, we're down by 134. Active under contract year over year, we're down by 418. Pending, we're down by 876. That's going to be a total of 1294. Last month, December 2024 versus December 2023, we were down by 2.7%. So far, we're down by 37. We're going to make up quite a bit of that. We're still going to be in the negative. I would say we're going to be in the negative double digit, but we're not going to cross 20%. When we look over this data 2 weeks from now, 3 weeks from now, as you know, we look over this every Monday morning. I would say we're going to settle right around the negative 10 to 15% on the properties that went under contract January 2025 compared to January 2024. And when you look at the difference between new and pending, you can see that we're at 1431 right now. And that's going to be the highest number that we've seen going all the way back to 2010 on the difference between new and pending for the month of January. When you look at the new listing to pending ratio, we're at a 0.61 right now. And that's going to be quite a bit different than January of last year, where we were at a 0.89 ratio. And you can see where we are in the ratio. The red dot is every January going all the way back to the year 2000. So here we are, January of 2025 This goes all the way back to January of the year 2000. All of the red dots are January so that you can see all the previous Januaries. And of course, here's the new listing to pending ratio using this kind of like the heat map type chart. And we're at a 0.61. So far, that's going to be the coolest January that we've seen going all the way back to 2010. This ratio is going to go up. I expect this ratio to settle right around the 0.7. It's not going to beat last year at a 0.89. It's not going to be 0.88, but it's also not going to be in the 0.6. As we update the pendings, because agents usually take a longer time to update the pendings, we're going to settle right around the 0.7. So that's going to put us right on that borderline, tangible, substantial increase in inventory. But bottom line, you all, inventory is going up at an accelerated rate. Now, we've got a bunch of charts that you can play with. So I'm not going to go over, let me see, how many pages do we have here? We have, just based on this info that we updated, we've got 58 pages of stats that you can look at. So you can see here, and you can just play around with this as much as you possibly want. This is a very powerful tool to go to your listing presentation with, to sit down with your clients, have a discussion. Take a look at the pending for the month of January. So far, we're at 2,197. That's going to be 23.8% below the average when we average every January. Now, what about cumulative? On the cumulative side of things, we're at 2,000. Well, it's January. Of course, it's cumulative because it's January. The only thing we have to compare is January. But we are down 37.1%. But we also adjust this for population. And you can see that on this chart. The pendings adjusted for population, we're a little bit on the low side of things for the month of January. So January is starting off a little bit slower than we were hoping for, expecting. So we've got a question right here. Is the difference between January 2024 and January 24 and 35 price-based, rate-based, or both? Can you clarify your question? I don't know that I understand your question.
Well, you're going back and you're looking at the various, the months and the data from 24, 25. So is the reason that we're slower and inventory is building, is that because of the rates? Is that because of the prices, or is that a combination of both?
Well, a very good question, Violet. Thank you for clarifying that. This is where it's interesting because the prices right now are very attractive. I would say that right now it's absolutely rate based. Is that when rates hit that 7%, we actually got up to 7.25. A lot of the lenders were pricing it at 7.25. It just caused this massive pause within the market. People are like, no, not doing it. I'm not crossing that. We had a really good October, November, and December. Listing agents that were relying on that lagging data, October, November, December, where it was really good. Prices were going up. We had an increased confidence within real estate. They overpriced their listings based on October, November, December data. So new listings came on the market more expensive than they should have at the very same time that rates exploded up. So now those listings are having to play catch up. We're noticing a lot of price drops on those listings that came overpriced at the very same time that now we're seeing rates coming back down. So my hope is that over the next 2 to 3 weeks, as rates continue to go down, we're at, let me see, what are we at right now? We're at 6.875 still, but really good day in the bond market. I'm going to go over that here shortly. As rates get down to the 6.75, which is certainly our hope, and sellers adjust to the drop in demand, that then we'll see an increase in demand. So it's going to be a combination, more so on rates. I would say 80% on rates, 20% on new listings coming on the market using October, November, December data that showed an improvement in market conditions. And these are listing agents that are relying on a comparative analysis, looking at what happened in the past, as opposed to a competitive analysis on what's happening right now. Does that answer your question?
Yeah, except I was looking, I put all of your weekly stats on one sheet.
Sure.
There's a lot of green arrows going up
On which
in
one?
the price area. Huh?
On which one?
On several of them. Just look at the first week, the second week, the third week, the fourth
Oh
week.
yeah, year over year,
Yeah.
absolutely. Yeah, year over.
Well,
But
but I'm just saying,
once again,
but if you look
that
at
is a
the
historical.
prices are still high.
Well, absolutely, they're still high, which is why when rates go up to the 7.25, people just stop. On a week over week, absolutely, and this is what Violet is referring to. When you go to market update, and then you go to kind of scroll down here a little bit, you go to the weekly market update, and let's just take a look at the last one that we published on Thursday. We are noticing a shift happening within the Austin area MLS, but look at the city of Austin. Across the board, everything is up. Now, this is where we take a 30-day period, and this was published on Thursday, the January 23rd. We take a look at 30 days, and then we look at the same exact 30 days a year ago. And we are noticing a retreat within the Austin area MLS, the 6-county area. But city of Austin, we're all green, but let me do this. This is really interesting. Let me show you the comparison to the previous update. Let's take a look. Let's go back to 2025. There's 2025. And look at the difference. We had 14% on the average sold in the average list. Now, look at a week later. We're down average list, it's now up by 5%. Average sold up by 5. So we went from being up by 14 to up by 5. You know what is going to happen, Violet? Mark my words, I guarantee you. Wait another 14 days, we're going to see some red arrows there. Because now agents have had to really catch up with the fact that rates went up to 7.25, 7.125, 7%. So this is going to be that historical data showing you what sold in December. We had a really good December. Prices went up in October, November, December. And now that rates then went up, now everyone's having to retreat. But you're absolutely right. When you look at these sold, and that's the whole lagging versus leading indicator, you cannot rely on lagging indicators. That's going to show you what happened in the past. We've got to be aware of it. Everyone is obsessed with it, but we have to be more obsessed with leading market indicators. But you bring up a very good point. But it's going to be a combination of the two. So take a look at the new listing to pending ratio. We've got a lot of resources here. I want to remind you that you can access that by going to Insight and Statistics, scroll down, go to new listing to pending ratio. This one was updated on January 25th. As soon as this meeting is over here in the next 27 minutes, this will be updated with the brand new that we just put together. So that's what's going to happen. As a matter of fact, I'm going to do this right here. I'm going to go to the new listing to pending ratio, and I am going to go ahead and update that right now so that when you refresh this, it is fully updated. Let me go ahead and do a really quick refresh, and you all, let me go ahead and refresh it again. And just like magic, it's already updated. So there you have it. This is the latest and greatest. You can access these 58 pages right now with the latest and greatest with all the information. Take a look at that. So that's going to be your new listing to pending ratio update for the entire morning, for the entire week. Be sure to rely on this information when you're having discussions with your clients, with your buyers, with your sellers. Let's go ahead and pivot to the bond market. And we're going to start by looking at the economic calendar for the week. And let's see what we can expect this week. Now, building permit data was just released this morning. Because the building permit data was released, we went ahead and updated our building permit section on our website. Let's do a really quick overview because this data was just published and keep in mind, it's now January 27th, and they updated it for December of 2024. So this is the latest and greatest. Within the Austin Round Rock metropolitan area, 3,073 permits were issued for all units, 1 unit, 2 to 4 unit, and 5 plus. 5 plus meaning the multifamily apartment. So this was just updated this morning. I updated this information the second this data came out at 6:30 a.m. So this is going to be the latest and greatest. So let's take a look at some comparison. Permits issued for the month of December 2024 down slightly, only down by 1.2% compared to December of last 2 years ago. When you look at the cumulative, meaning all permits issued from January all the way through December last year within our metropolitan statistical area, 33,530 permits were issued for 1 story or 1 family, 2 to 4, and 5 plus multifamily. That's going to be 11.3% drop compared to a year ago. 11.3% drop. So this information was updated. It's all the latest and greatest. Let's take a look at 1 unit right now. 1,077 1 unit permits were issued, and that's going to be a drop compared to the previous year. That's going to be a drop of 10.8%. When you look at cumulative, all permits that were issued from January all the way through December, we've got a 4.9% increase. So more permits were issued in 2024 compared to 2023 for 1 unit. That's going to be that single family. It does include condos. So all condos, single family, townhomes, all those permits, a 4.9% increase. So this information was updated based on what was published this morning. Then we've got new home sales that came in higher than expected. This is for the entire nation. Tomorrow, we've got house price index. Very important. As soon as this house price index is updated tomorrow morning at 0800 hours, we will be able to update 2 resources on Insight and Statistics. We're going to be able to update the house price index, the Freddie Mac house price index, and the national market index. These 2 will be updated tomorrow morning at 8 a.m. Once you log into the website at about 8:15, you're going to see that these 2 are updated. That's going to be the S&P, and that stands for Standard & Poor's. CS stands for Case-Shiller. That's going to be updated tomorrow. So really big day tomorrow for real estate data that's going to be published. We've got consumer confidence, also very important. We've got Atlanta Fed GDP. I don't think that's important at all. I think it's actually a complete waste of time to look over this. And it's also preliminary, so I really don't care about that. On Wednesday, we've got mortgage information. But here's the big one. We've got the FOMC. What does FOMC stand for? It's the Federal Open Market Committee. That is the body that decides on interest rates. And we've got an interest rate decision on Wednesday at 1300 hours. And for those non-military, that is 1 p.m. So at 1 p.m., be sure to check our internal Facebook group. I will publish their decision the second that it comes out. The expectation is that they're going to stay the same. It's currently at 4.5%. Everyone expects that they stay at 4.5%. I'm a part of that everyone crowd. They're not going to increase it. They're not going to decrease it. It's going to stay at exactly 4.5%. The market has already priced that in. That's going to be inconsequential. On Thursday, we've got GDP and we've got PCE. PCE stands for Personal Consumption Expenditure. That's inflation numbers. GDP is going to be the strength of the economy. Those are going to be preliminary numbers, but we also have consumer spending. And then on Friday, Friday's going to be the big day because Friday we have real inflation numbers. That's going to be that PCE number, Personal Consumption Expenditure. And you've got personal income, you've got personal spending. That's going to be the day that's going to move the market. So the market's going to be a little bit erratic between now and Thursday, trying to figure out what in the world is going to happen on Friday. But Friday is going to be a winner-take-all kind of market. If we have better than expected inflation numbers on Friday, you can expect really good movement within the bond market, or at the very least, if the bond market is anticipating good numbers on Friday and the bond market is pricing that in between today and Friday, then you can expect the market to hold firm with what they've priced in. If we have worse than expected numbers on Friday, you can expect a complete reversal and you can expect rates to go up, meaning you can expect the price of that bond to actually go down because you know that there's an inverse effect. If the price of a bond goes down, the rate goes up. If the price of the bond goes up, the rate goes down. And take a look at what's happening with the 10-year Treasury right now. We take a look at the 10-year Treasury because of it's a correlation to mortgage-backed securities, not a causation, but a correlation. When the 10-year Treasury goes down, as far as the yield is concerned, and this right here is going to be the yield currently at 4.546%, there is a correlation effect, not a causation. A drop in the 10-year Treasury does not cause a drop in rates. It correlates to a drop in rates. And you can see here, you all, that we are starting out the day on a really, really good positive note. We are down 8.3 basis points on the 10-year Treasury. We've crossed a repricing line. If we can hold firm to this past 1 p.m. today, then you can expect, hopefully, you can expect a drop in rates. We're at 7.875. That would be catastrophic. We are at 6.875 right now. The amazing Robert Merrill, just love this man to death. He went ahead and just gave us the rate sheet early today. He is super faithful and consistent giving us the rate sheet. So here's the rate sheet. 6.875 conventional 30 years, 6.625 conventional 15-year. FHA really nice at 6.25. It'd be nice to get this right at 6 if we have a continued positive movement within the bond market. But this FHA 30 years is fantastic at 6.25. That's really good news. VA at 6.5, USDA 6.5. We've got 6.75 jumbo, and look at that investor getting just killed at 7.5. But overall, the bond market very positive this morning. Our hope is that the momentum continues and that we will see rates right around that. Boy, it'd be really nice if we could get down to that 6.5. But we're going to have to wait until Friday. Our hope is that the bond market is pricing in good news between now and Friday. And then we have even better news on Friday that'll cause even more of a drop within the bond market. But it's going to be very erratic between now and Friday. And then it's going to be really a winner take all when it comes to Friday. So that is going to be your interest rate recap. Now, let's take a look at the overall market and see what in the world is happening within the Austin market. We're going to focus on the residential listings in Austin. Let me go ahead and make this a little bit bigger. As a matter of fact, I'm going to download this so that we can make the entire screen, make this the entire screen so that you can see absolutely everything. So just give me 1 second so I can open this up. And as of this morning, there are 11,532 active listings currently on the market. 11,532 active listings currently on the market. That is an increase of 77. When you compare that to Friday, that's an increase of 165. When you look at it a week ago, that is a drop of 111 compared to a month ago. So we're down by only 0.95 compared to a month ago. We got to the point where we were down by 13 January 2nd. So you see how inventory is going up. Year over year, we are up 17.6% year over year on the number of active listings. On pending, we're at 3,540. That's going to be down 5.3% compared to a year ago. That's going to give us an activity index of 23.5%. Activity index, very important, just like the new listing to pending ratio. That's going to be the pending divided by the active plus the pending. That's just going to give us, it's really almost like a hotness ratio. 25% is going to give you more of that balanced market, 4.5 months of inventory. So as this number goes down, months of inventory starts going up, and you can see that we're currently at a 4.04 months of inventory when you look at everything that's active and everything that's sold over the past year. Really quick recap right here. Activity index on new construction, 28.47. Activity index on resale, 20.68. Good news on the resale side of things because we were under 20% and now we're at 20%. So that's really good. So when you look at active listings, the bluish one is 2025. The red is 2024. The gray is 2023. And you can see that we are up 17.6% on active listings. On pending, we are trailing last year on the number of pending. We are down 5.3% on the number of pending compared to last year. And let's take a look at activity index. We are also trailing last year on the activity index by quite a bit. Last year, we were at 27.6% activity index, pending divided by active plus pending. This year, we are at 23.5. So that is a drop of 14.9% on activity index. Now, out of all of the active listings currently in the market, 48.1% of those have had a price drop out of the 11,532. And you're going to find this under the active residential listing. Let us take a look at activity index for zip code. Then we're going to take a look at market cycle. So I'm going to go activity index zip code. Let me make this a little bit bigger so that we can see the entire thing. I'm going to download this so you can see it within your entire screen. And let me open this up. Activity index. Keep in mind, you all, activity index pending divided by active plus pending. I love this sheet because it's going to give you that really good snapshot of not only the activity index, but also months of inventory. And you can see that, man, 78701 is just getting absolutely just pounded. We're only at 8.8% activity index. There are some crazy, crazy good deals within the 78701 zip code. Because the activity is just super, super low at only 8.8%, that's going to give us that 10.1 months of inventory. But what I want to focus on right here is the historical side. So we can see 01 has gone down. This is the trend line going back 12 months. Do we have any zip codes that reached record highs and record lows? Yes, we've got 78727 doing extremely well at a 35.5% activity index. That's going to be a 12-month high. So 27 is doing great. But then we've got the 78728. That's a 12-month record low. 27, 12-month record high. 28, 12-month record low. Real estate is hyper local. Every zip code is going to be a little bit different. Let's take a look at the rest. We've got quite a few record highs. We've got 3.5 doing really well. We've got 3.8 doing extremely well. We went from a 17.8% activity index for July and August, shooting all the way up to a 27%. Look at 3.9, killing it at 56.7% activity index. 4.4 reaching a record high. It's amazing. You know, real estate, it goes back to that. Real estate is hyper local. You've got one zip code reaching a record high activity, another zip code just absolutely plummeting. And let's keep on going. Let's take a look at a few more. We've got Spicewood. That's going to be a record high. Jarrell, a lot of new listings hitting the market in Jarrell. And take a look at that. That just reached a 12-month record low. We've got Driftwood at only 9.1. That's going to be a 12-month record low. We've got Cedar Creek inching towards a record high at 24.8. The record high was February 2024 at 25. We've got Smithville, record low. And let's take a look at months of inventory. What are some of the zip codes with record low 12 months of inventory? When you look at 12 months, we've got 2.1. 2.1 just hit a record low at 4.58 months of inventory. We've got 3.3. Look at what's happened with 3.3 over the past 6-7 months. 78733, we went from 7.47 months of inventory down to 2.82. Look at 39, 0.96. 39 is one of the examples that if you come to me and you say, Dan, let me go ahead and click on 39. Let's pull this up. Let's just say you're looking at this property right here at $750,000 to $850,000 at 77% activity index. If you show one of these two properties, there are only two properties in that price point, and you're like, Dan, my client's really interested on this property. It's been on the market for 5 days and it's priced at $775, and the listing agent told me that there's another person interested. I'm going to tell you to go over list price. I'm like, go over list price. If your client wants that property, they're going to have to be super aggressive. They're going to have to go over list price. That's that property at that zip code, at that price range. Super high demand, very low inventory, low days on the market, crazy high activity index. This zip code is performing extremely well. Matter of fact, I told an agent, I believe it was Friday or Saturday, yeah, you got to go over list price. Now, let's say that you've got a client that's looking in the 5.6, and let's pull up 5.6. And you've got a client looking at the 5 to 650 in the 78756 zip code, and they're looking at any one of these properties. There are 7 active listings currently in the market between 500 and 650 in the 78756. That symbol right there, activity index, that's a 0, meaning nothing. There is no activity. You know what that means? Not a single property is pending. Everything is active. You've got 10.5 months of inventory at this price range in this zip code. You know what I'm going to tell you? Offer $100,000 less. Who the heck cares? There's no activity. That seller's desperate. Here you've got a property with already a 20 to 25% price drop. And if you're a listing agent in this zip code within this price point, you've got to sit down with your client going over this information saying there's no activity. Nothing is under contract. We have to adjust the price. So in this situation, your seller has no leverage. There's no activity. Your buyer has all the leverage in the world. They can be as aggressive as they want. 2 different zip codes, 2 completely different realities. That is why, my friends, we 100% rely on data so that we can advise our clients accordingly. So that's going to be the activity index. Now, let's take a look at market cycle. We're going to go back to Insight in Statistics. Scroll down a little bit. Let's click on market cycle, make this a little bit bigger. We're going to download this so that we can look at the entire PDF and do a complete pricing overview. And we are already at 10:53, which means this is going to put us towards the end of the meeting. But let's see what's happening with pricing. Reminder, this is going to be that lagging indicator, not the leading indicator. We've been focusing this entire time on leading market indicators. What is currently happening right now, the leverage that your client has right now. This is going to be that lagging indicator. This is going to show us what has happened here in the past few weeks and few months. 1,683 properties expected to sell January of 2025. That is going to be a 6.2% drop compared to January 2024. So now we're seeing the effects of a rising rate environment. What about pricing? The average sold price month over month is down 5%, 28,000. Year over year, it's up because the average sold price so far is $546,992. The average sold price January 2024, $538. So we are up 1.6% on the average sold price. But what about the median? Median, we're at $415,000, you all. We are down 7.8% on the median sold price so far this month. We are down 3.1% on the year-over-year median sold price. Last year was $428,386. So far, right now, January at $415. I'd say we're going to settle somewhere around the $410,000 mark. Less expensive homes tend to sell towards the latter part of the month. It's just the way it is. So we can expect cheaper homes to sell towards the end of the month. That's going to drag that median sold price and the average sold price down a little bit, but we're going to end negative month over month and, of course, year over year. Now, the sold to list price ratio is exactly the same, 96.78. So let's take a look at the average sold price. The market so far is down 19.8% from the peak May 2022 to right now. Still, year over year, we've been 3 months positive, but we were positive last year for February, March, and April. We've been positive for November, December, and January. It's going to be interesting to see how February plays out. On the median side of things, here's the median sold price. And this is really telling because this is January, 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 and January. So January of this year, January of last year, 2 years ago, and then, of course, 3 years ago. And you can see the trend line on the median sold price for the month of January. From the market peak, we are down 24.55%. As you know, the market peaked May 2022 at $550,000, and we're currently at $415,000. So when we look at the median sold price compared to 24 months prior, we're down 7.77%. Compared to 36 months prior, we're down 13.72%. Now, if today is the absolute bottom of the market, if the prices do not drop further from today and we use the 25-year compound appreciation of 4.641%, we can expect the market to go back to its high in only 61 months, and that's going to be April of 2031. That's how long it will take for the market to reach its peak value again. You would be shocked at how many times I get asked this question by industry experts, fellow agents, fellow brokers. Matter of fact, I was having a conversation with a friend of mine. He's a broker in LA, and we were having this conversation. And he's like, well, how long do you think the market's going to take to return? I'm like, well, what do you mean by return? He's like, well, return to peak value. And I shared with him the screenshot, and he's like, whoa. I'm like, yeah, that's the reality. And by the way, guess what's happening with the LA market after the fires? Guess what's happening with buyer demand within the LA market after the fires? Skyrocketing. Because they need a place to live. You've got multimillionaires, some of them billionaires. Their homes were utterly destroyed. Anything that comes on the market, they're buying. They're like, oh, property came on the market, 10 million, done. They are getting multiple offers, cash offers on overpriced homes. It should have been priced at $7.5 million. They price it at 10. They're getting offers for 13, 14 million. Because the people like, I lost everything. Like they're worth $500 million. Like what's 10 million? What's 15 million? Like who cares for them, right? The market right now is just going crazy because the time to rebuild, it might take years. It might take 10 years to rebuild some of those areas. Imagine, you look at Pacific Palisade, there's one road in, one road out. Even if the permitting process is approved immediately, the logistics of it, thousands and thousands of homes burned out. They're not even allowed to clear out the lot yet. It's going to take years and years. And in the meantime, they need a place to live. Now, I get it. Some of those people, that's their second, third homes. But some of them, it's like, no, that was their primary home. That was their main home. They're not going to move out of that area. The market right now in that area is just going absolutely crazy. So really interesting. So far this year, the average sold price this year, $546,922. That's going to be a 3.6% drop compared to the entire average sold price of last year. And of course, the median sold price so far this year, $415,000, and that's going to be a 5.9% drop compared to the median sold price for all of last year, which was $440,000. And you all, it is 10:59. I want to remind you that all of this information is in Insight and Statistics. Take a look. Every single one of these was updated this morning. So you've got the latest and greatest on absolutely everything this morning. I'm going to do one last thing. We're going to do type of market really quick. I'm going to make this a little bit bigger. Out of the 75 zip codes within our metropolitan statistical area, 40 of the 75, 53%, are still in a seller's market, meaning less than 4.9 months of inventory. Neutral market, 21 out of 75 zip codes, 28% in a neutral market, and 17 out of the 75, or 14 out of the 75 in a buyer's market. That's going to be 19%. You've got the color code right there. So you can just go down, scroll down, and just see you've got 3-4 in a buyer's market. That's going to be the 70th zip code out of our 75 when it comes to inventory. You've got that entire recap right there. It is 11 o'clock. Any questions, comments, concerns, criticisms, or complaints? It is 11 o'clock. We want to make the absolute best use of our time. Questions, comments, concerns, criticisms, or complaints, feel free to send a chat message private, or you're welcome to unmute yourself. Any last minute questions, comments, concerns, criticisms, or complaints? Going once, going twice. All right, good stuff, you all. Thank you. Yes, go for it, Sonia.
Just really quick, this, I'm typing it right now.
Yes.
Is that one of those taxes that requires a notice to purchaser that we have to include on a contract?
Does it show up on the jurisdiction? It sounds like it does show up on the jurisdiction. That's correct.
Jurisdiction. It is noted, like there is a MUD, so there is a WCID, so that one is obvious, and this one I looked it up and I wasn't sure what that is. It's a road tax. So is that a different?
Sometimes a road tax will have a notice to purchaser that is associated with that. It's going to be a 50-50. Is this a listing that you're listing, or is this a buyer you're working with?
It's a buyer.
Okay, it's a buyer.
It's a condo.
Oh, it's a condo. Interesting. Yeah, sometimes the road tax will have a notice to purchaser that they have available, and sometimes they absolutely will not. Now, does that fall under paragraph 6E3 statutory tax district, which talks about chapter 49 of the Texas Water Code that gives the buyer the right to terminate the contract in case the seller doesn't provide notice to purchaser? No, it does not. It does not. So I would do this. Ask the listing agent. Well, I would even backtrack a little bit. Get it under contract. It's probably a very small tax, correct? A very menial small tax?
Yes.
Okay, so let your client know, which I'm sure you already did, share the realist tax report with the client where it gives you the breakdown of each taxing jurisdiction. Share that with your client. I know you're going to share that as part of submitting the offer. They're going to be fully aware of it. Get it under contract. And then as soon as it's under contract, immediately reach out to the title company and say, hey, this road tax, is there a notice to purchaser that should accompany this? They'll do the research. They'll figure it out. If there is, get it over to your client during the option period. I mean, it's going to be a very, very small tax. So probably not a huge concern for the client. It's probably, I'm going to guess, it's probably $130 a year.
I don't have it in front of me, but yeah, it's very little.
Okay, so there you have it. And as a matter of fact, we can go to the Williamson County tax, they have estimator. Okay, Williamson County tax estimator. They've got an absolutely fantastic tax estimator. So I'm going to go to special district, and I'm going to find this special district. That's going to be, they might not even have it here. Sometimes they don't even have it within this special taxing district. So here's all the MUDs, reinvestment district. They might not even have it right here. Doesn't even look like they have it. Okay, so 0.004. I don't even see, okay, we've got a road district. We've got okay, so SC, is it the SC, RFM, Williamson County, FM Road? I don't even see it here on the list.
It's on Williamson County. It's listed there. But
Sure.
yeah. Okay, I see that. That's interesting.
Yeah, I'm just going to grab any one of these.
When I Googled, it tells me, I don't know what RFM means. It just says, Williamson County FM Road, and then it says it's a road tax, but so it doesn't say RFM anywhere.
Sure. Yeah, it's not even on the list of special districts on the entire Williamson County. It's not even on this list. I mean, I'm just going to grab any road. Let me see if I can find any road tax. Okay, so here's one. This is going to be the Northeast Round Rock Road District. I'm just going to grab this, and I'm going to say, $100,000 just to make the math super simple. Williamson County. And they don't even have anything here. Home said yes, not applicable, not applicable. So yeah, this district has a 0.355. Yours is this is a 0.3. Oh, this one is 0. So let me find another one that is a road district. Let's calculate this. Yeah, that one is a 0 also. So, and yeah, that one is also a 0. So if yours is a 0.04, so that means that it's going to be $40 per $100,000. How much is the value of the property?
400.
400. So 44 times 400, $160. So there you have it.
Yeah.
I wasn't that far off.
Yeah.
Per year.
No, I knew it was very little. I just didn't know if it needed to be listed on paragraph 6 there with the MUD notice. And then I was gonna contact the title company, but I figure that, we'll get it under contract. So, okay.
Well, if they did not provide it, even though it's a condo, the language is exactly the same. So I'm going to use a 1 to 4 family. But if they did not provide it, then you're not going to write anything there. So, here it says the following notices have been given or are attached. So if the listing agent did not give you that notice, do not write it there.
Got it.
Yeah.
Okay.
And that's where I say it's really not our job as buyer's agents to go chasing after this information. Now, is it wise for us to do that for clients to be equipped, empowered? They know exactly what their tax burden. That's why we provide the realist. But if they did not give you that notice and that notice is required, then don't write that notice there. And that's where I say during the option period, hey, title company, is there a notice that should accompany this road district tax? And if they say yes, here you go, then we can just get that done during the option period.
Got it. Perfect. Thank you so much.
Yeah, absolutely. Absolutely. Good stuff. Good stuff. Anything else, you all? Any other questions, comments, concerns, criticisms, or complaints? Going once, going twice. All right, good stuff. For all of the Team Price agents, I will see you tomorrow for our mentorship meeting. Be sure to join us. And then for all of the guests that we have here, thank you so very much for joining. Super appreciate it. If you have any questions, feel free to reach out and I will chat with you later on. Have an absolutely amazing rest of your day. And let's have an amazing, amazing week out there in real estate. Really excited for this week. And I will chat with you later.